Good?
Yep, we're good.
Okay. Welcome, everybody. We're ready to start our Board of Trustees meeting. Today, June 27th at 9 a.m. at the district offices at 604 West, 6960 South, inside the Salt Lake County Public Works Administration Building. Okay, she's here.
Yes.
So, first on our agenda is to welcome our new executive assistant, Katrina Garcia.
Yeah.
So excited.
Thank you.
Do you want to lead off on this, Kim?
Yeah, so Katarina has 24 years of executive assistant experience coming from the private side of business to the bright side of government. And we want to welcome her. She started on June 6th and hit the ground running. I did have her take an oath of office, even though formally we're going to have you adopt a resolution for her, so I would just ask. She is my appointee for the board clerk, and if you all would support that and adopt the resolution, making it formal.
Nice. So our policies require that we adopt a resolution for our clerk, and so I would look for a motion for someone to adopt this resolution.
I'll make the motion to adopt the resolution 4414, appointing Katarina Garcia as the district board clerk.
Okay, Van made the motion. Can I have a second?
Second that.
Phil made a second. All those in favor?
Aye.
Aye.
Aye. Are there any opposed? Awesome. Well, welcome. We're super excited. That's right. Oh, we're super excited to see that seat filled. I'm really looking forward to getting to know you.
Great, I'm happy to be here.
It's a critical role for us, so we're really excited. Thank you for coming on board. Okay, we'll move right along to our consent items. We have 2.1, which are the May 23rd board meeting minutes. Is there any questions or comments on those minutes? If not, I'll look for a motion.
This is Keith. I move we adopt the minutes from May 23rd, 2022.
Perfect. Keith has a motion. Can I get a second?
I'll second.
Diane has a second. All those in favor?
Aye.
Aye. Are there any opposed? Okay, perfect.
Oh, point of order, sorry, Madam Chair. Can we get a roll call for the board members?
Sorry. Yeah,
Yeah, no, you're good.
You want me to do that? Yeah, we do call that.
Yeah.
Sorry, we should have done that in the beginning. We're gonna do a roll call for board members.
Okay, Sherry, we've got present in person. Dan Gibbons,
Here.
Anna Barbieri, Eric Barney, Scott Bracken,
Yes.
Phil Cardenas,
Here.
Tom DeSiret, Robert Pignon,
Planning on joining us, I hope.
okay, Patrick Schaefer,
Here.
Cindy Sharkey,
Here.
Tessa Stitzer, Laurie Stringham, Diane Turner is here, and Keith Susan.
Yep.
We have 1, 2, 3, 4, 5, 6, 7, 8. So we've got a quorum.
That's fine.
Barely, goodness.
Yep. Oh, someone's raising their hand. Who is that?
Oh, Robert.
I got
You
here
are-
late.
Okay, thanks,
Great.
Robert.
We got 9.
Thank you for that very important point of order. Okay, we're gonna move forward on item number 3, that the meeting open for public comments portion. Is there anybody in the public wishing to make any comments? Did you see any online? There's no one.
anything?
Okay. We don't see anyone in the audience or anyone online indicating the desire to make public comment, so we'll close that portion and move on to item number 4. 4.1 is adoption of resolution 4414 appointing Katrina Garcia. We already did that, as our board clerk. And then 4.2 is review properties released from the May 2022 tax sale count.
Okay, so I think we're having some technical difficulties. I'm not sure if the board can see the, screen online. Can you see the screen?
Yeah.
What's that? No? Okay, if not, that's okay. We're gonna wing this. If you all would pull up your packets, we've been having some technical difficulties here in the building, with our account, so we'll get those resolved. But if you would all bear with us and pull up your packet, that was sent on an email last Thursday, if you can have that on your screen, and then we'll just have you, as the board online, here with us on the screen. So we had 3 properties. Oh,
I was able to see the thing. I just had to change my view to speaker mode, but I could see the share.
okay.
Yeah. Thank you.
The packet up or just the agenda?
Yeah, can you see?
If not, we can just go,
It's the packet.
okay, go ahead and scroll down to page 15. Yay. Here, one more, there we go. Okay, so we have 3 properties that were released from the property tax sale. These are homes that will, the first 2 will still have a lien attached to them, to make sure that Wolford receives our delinquent fees. And as just a reminder, the Property Tax Committee of Salt Lake County does work with the homeowners to set up payment plans, and those required monthly payments are listed under 1 and 2. For the 3rd property, the resident has 100% relief from property taxes due to being a disabled vet, and so it was only our fees that were delinquent. So I did talk to the auditor's office, the Salt Lake County Auditor's Office, and released that property from the sale, until I could work with the homeowner to understand that our fees are not part of the property taxes. So she did go in and pay those in full, and so the lien has been removed. Just an FYI on that one.
Okay.
It's just an informational item, Madam Chair.
Thank you for that information. We'll move on to item 4.3, the 2021 Annual Comprehensive Financial Report.
Good morning. We talked about this at the last meeting, and the auditors were here, Squire and Company. Kyle Green, who's a partner, came and presented some information. But we did get it finalized, and we're ready to submit it to the state auditor's office. There, we have electronic copies, and we also have some hard copies, and we can make more hard copies if people wish to have that, so that's no problem. We just wanted to go through a few items here. The auditor sent us some more information. I think this was very similar to what he presented when he was here, but he did request that we present this at the board meeting and just have the information available. And so first off is just an executive summary. It talks about the audit. There was an unmodified opinion, which is referred to as a clean opinion, so that's always good news for all of us when that happens. And then also an unmodified opinion on the state compliance section also. And so some of the things they tested or looked at were cash disbursements, cash receipts, payroll transactions, and capital assets. And so they look at those different areas. They look at a lot of detailed invoices, agreements, are there approvals, those type of things. Is it in the proper period? And looked at that, and we were in good shape. And so the district, we have a pension liability of $178,000 as of December 31st, 2021, and then unrestricted net position of about $12 million. And so that's kind of a summary. Kyle talked about some of those things when he was here before. But then we'll just Move on to the next page, and this is a governance letter. As far as going down through here, their responsibility really on a financial statement audit is assurance about whether the financial statements are free of material misstatement. And so that's a little different than that they're perfect, and we think they're good, but in the audit world and accounting world, really material misstatement is what they're looking for and being free of that. And so that's one of the main things they always like to also bring up too, because I think from a liability perspective, you know, they don't look at every single transaction, but they sample and test. Just going down through here, there's different sections. You're welcome to look at them. As far as the significant accounting policies on page 18, we talked about this before, and this year we adopted government accounting standards, board statement number 87, which was leases, and that will show up here in just a minute as far as our financial statements and how some those amounts were recorded. We have significant accounting estimates. We do use actuaries. The state uses them with URS, and then also with OPEB. We have actuaries that we work with and provide those numbers. And so that's pretty standard when you start talking about retirement and some of those benefits and where you're projecting now. So significant or unusual transactions, they did not identify any significant or unusual transactions during their audit. The next page on 19, they talk about uncorrected and corrected misstatements. We did have one issue where we overstated sick time, or we recorded too much for that, and we under-recorded overtime, but the net amount was $300, and so we did not book that, and that's not what you consider a material adjustment. And then we'll change that and get those for next year. But just wanted to bring that to the board's attention. There was no disagreements with management, and then as far as that's their letter, you're welcome to look at that. And then they had an adjusted trial balance, which is attached, a summary of audit adjustments and reclassifications, and then a copy of management's written representations. And so with audits, and this is standard, really public, private government, they ask management, which is Pam and I, to sign off that things are good. We're not aware of any issues or significant material errors. I tell Pam it's kind of like we're saying the world's perfect. And so, I don't know if it is, but as far as the accounting goes, I'm comfortable that we don't have material mistakes. And so I don't know if there's any questions on those two items before we move on to the next thing.
Signing your taxing, to the best of my knowledge.
Yeah, right, exactly.
So, okay, we'll go on to the next one. Wanted to talk a minute. Let's see.
33?
Yeah, I think it's 33. I'm just getting through here. Yeah, let's go to 33 if we could, please. And so we're just going to review the financial statements briefly. We did this back in January. There are changes. Those were preliminary. And so when we look at this, this is our statement of net position, or it's similar to a balance sheet in the private sector. But we look at that, we have cash. The state treasurer's pool is the PTIF, and then those investments are what we have in our Zion's investment account. Accounts receivable, that's mainly recording what's due to us from customers, primarily with the side load business. Prepaid expenses, at year end, we paid some money in advance on trucks, and the 2 front load trucks, and that was the biggest portion of that. We also paid a membership, or a couple memberships that were not effective until 2022, and so we show those as prepaid. And then inventory is our can inventory. So at year end, we count that and adjust it and record how many cans do we have. We have the green, the recycling, and then the refuse cans. And then down below are the non-current assets. The capital assets are listed there. And there is a new category, that leased assets, which is about the 5th one down. That's something that's new this year in the way we recorded it in regards to that standard. And the auditors did help us out on that, and so we worked with them and got that in there. So that's really the balance sheet. I don't know if there's any questions on that. Well, let's go to the next page. That's the asset portion. And then we also have the liability portion, accounts payable and accrued expenses. That's really what we owe vendors. accrued salaries and benefits payable. So at year end, how much did we owe our employees and the related benefits? The other current liabilities is workers' compensation insurance, and then we have compensated absences, and then a lease is payable. And so those are the current liabilities. And it's always nice, I look at this all the time, but I always look at what's current assets and what's current liabilities, because that's kind of a measure of how healthy an organization is. And our current assets are 16 million, and our current liabilities are 0.5. So that's really good. Most organizations would love to have that. And we'd like to keep it, you know, that relationship in a good place. Just going down below, we have compensated absences, net OPEB liability, the net pension liability, that other non-current liabilities, really work comp, and then we have leases payable long-term, which was also new this year. So the leases payable here, in both cases, was new this year. So I wanted to talk just a minute about one thing I brought up with Pam is, with URS, they give us the information to record entries and to adjust the liabilities and to show expenses, but we do not get that until usually February. And this past year, I don't know if you remember, but we were thinking we'd have a negative number or a loss, and we ended up positive. And the URS adjustment that came in was about almost $500,000 positive. And so that helped us out for 2021. My concern is when I think forward and I think of the markets this year, if you can have a $500,000 plus, kind of flip the other way, and you know, and you don't find that out until the year's done and we're past that. And so if we ever got very close to the total budgeted amount of expenses, that's something I'd be thinking about. And with URS, like I said, they have actuaries look at that. They spend a lot of time. They provide that information for all organizations. It's not just us. I mean, it comes in a report, a standard format. But we do not get that. But that's something I just think that's in my mind, and I wanted to share that. It helped us this year, great. It makes us, you know, look better. We reduced the liability, but it could go the other way pretty easy, especially with the returns of the market this year. And I don't know how many of you watch that, but don't. It's not a don't look too often. It doesn't make you feel very good. So, but that's the statement of net position. And then we'll just go to that down on one sheet. This is, I wanted to show this one because this showed the 2 years, but really this is a statement of revenues, expenses, and changes in net position. It shows there are collection services, other revenues, and in other revenues we have late fees, new cans and delivery, the CNG rebate amount. Those are things in the other revenues. And then these other categories are really similar to what we talk about every quarter when we meet. And so we can look at that and see, and you can see the difference of last year versus this year. The one that really helped us out is our recycling fees. In 2020, it was almost 1.1 million. It went down to 330,000. And so we got a benefit of 728,000 there as far as comparing it to the prior year, and that really helped out the bottom line number. And so these categories, like I said, are similar to what we present quarterly. When we go down here and we're looking at 2020, down towards the bottom it says income loss before contribution and transfers, and that's the same as changing that position, but it was a positive 210,000 for 2021, and for 2020 it was a negative million. And so quite a change there. You know, it can flip and things can change, and that's the world we live in. So I don't know, are there any questions on this as far as the report, the auditor's report, any of the information? I'd be happy to answer them or find the answer.
I'm just curious about the recycling fees. Why the change?
Yeah, I think a lot of it, and Pam can answer this too, but I think, you know, a few years ago, China used to take a lot of the recycling, and we actually, the district received some payment per ton for it. China and I think other countries cut that off, and there was really an oversupply of it, and it lessened in value where we had to pay. And I think it took a while. I think it's taken some time for the United States to get the infrastructure in place, in my opinion, to service it. And I think long-term, it's probably a good thing. It was just painful for a few years there. And I think as there's more capacity that comes on, there's still a demand there, but is there just capacity? When I say that, I mean capacity to process it and deal with it. And I think we've gotten better with that in the United States, at least from what I've read and my understanding, is we're developing that internally, and we did not have that much of that before. I don't know what else you have, Pam, but that was one of the big things I think that happened. And then with recycling, it's based on numerous, not just one category, but numerous commodities. And so, you know, how much is cardboard, what's paper, what's aluminum, what's plastics, and you get all these different categories going in there. They can be pretty volatile too.
Yeah. Well, that's kind of what we had hoped would happen, and it finally is.
Yeah, the market.
Yeah, I'm so glad to see that. Thank you.
I think it is, but the thing is with commodities, and I worked before in my past life, I spent a lot of my career in commodities, and they can change really quick. So I'm always, I never declare victory when it comes to commodities, because it can switch really quick. You know, we hope it goes that way, and it's holding up this year too, and so that's a real plus for us, I think.
Yeah, I think you have to budget very conservative.
Yeah, you do, and just be aware of it. And the more you're watching, the more you realize, man, there's a lot of stuff going on behind there that can affect.
Thanks, Dan. Does anyone else have any questions for Paul? Okay, well, we'll move on to 4.4, which is the review of the cash projection and the 2023 season area.
Okay, page 30, oh yeah. 36, thank you. Okay, so Paul put this together. It's basically a table to show our, the fund balance and also our cash balances. We've been talking to you as a board to give you some notice about the thought of raising fees in 2023 to help account for the increased cost of, well, inflation. Labor has gone up, as you know, fuel has gone up as far as diesel. We do benefit from using CNG for the majority of our fleet, but however, we're seeing that go up slightly as well. So everything is increasing in costs. So Paul did a great job putting together a historical going from 2019, and then just a reminder that we did, the board approved a fee increase in 2017 for the year of 2018, and that was implemented as of January 1. We didn't actually receive the benefit of that until April when we start billing, and because we bill in the arrears, 3 months, so we actually don't get that cash until April, May when we do the billing. But at any rate, 2018 is when that fee increase happened, and it was a $2.25 per month fee increase, moving from $14.75 to the current $17 a month. So Paul, I don't know if you want to go into some of the specifics about this. I think it's very beneficial.
Yeah, sure. We've looked at this in the past, and just wanted to talk big picture, some of the things with this. Before I was just going off the budget amount, and then I got looking, and historically we had not spent or hit our budgeted expenses a lot of times, and so it really showed the cash coming down quick. And so what I did, I think the past year was, I looked at that, and I looked at some history, and on the budget we spent about 91% on average, right around there. And so I take the budgeted expenses and I times them by 95, and so for the future. And so what I'm doing is saying, this is what we budgeted. Historically, we have not hit that, and I'm trying to get a more accurate cash projection. And so that's the yellow line. That's why it's yellow. And then up above there, it says operational expenses for 2022 to 2026 calculated as 95% of the budget. And so for the budget year, when we do that, we go in and look at each individual category. So for 2022, some things we take up 3%. When we do like personnel, we actually go in and do head counts and get what are people's benefits, who has family insurance. I mean, it gets really detailed when we get down to that degree. For 2022, we had fuel at 7.5%, maintenance at 6%, We had recycling at $30 a ton, and it's been a little less than that. Cans, we had at $75, and they're getting there. They're not quite there. We did get some that were lower than that. But it's challenging on this because that's what we did for the budget year, and then you go out the next 4 years, and we usually take revenues up 1% and expenses 3%. Generally speaking, that's kind of the general rule. And if that's what's going to happen today, I don't know. I mean, I know inflation nationwide is 8 to 9%. Utah's a little higher. And I think I said this in pre-board, I don't see how we can keep going at this for 4 or 5 years. This isn't gonna go. And so I think we're still pretty accurate going out 3%. I don't know, you know, is it gonna go another 2 years and then swing? My personal feeling is I think it is going to swing, especially if they keep raising interest rates. I think they will slow this thing down, but when and then how much? But when you're projecting out expenses, it's challenging because you really don't know the timing of some of this. So I think the bottom line for me is just we have to remain flexible. I mean, be aware and make sure, you know, we're reporting things and then be flexible too. This is our plan, this is what we want to do, but we reserve the right to change, you know, depending upon what happens. But just that's kind of a big picture on this document. As far as the details goes, each year is across the top, and those in the bluish gray are actual numbers. And so we start off with beginning cash. We add in asset sales. Then we have total revenues, and then operational expenses, less expenses that are non-cash, like depreciation. That's not cash out the door, so it doesn't affect our cash balance. But capital expenditures do, and so that's the next category. So when we buy new trucks or any capital expenditures, that's cash out the door as of that point in time, and so that's a negative. But really, to me, the main line to focus on here is 3 lines from the bottom, that ending cash and investment balance. And that does include PTIF, it does include our Zines investment. Those are liquid, we have access to them, and so we do include that. And so we go out across there, and we're projecting at the end of this year will be about 7.3, 7.4 million. And so, looking at this, I mean, it is declining, and Pam mentioned the increased cost, but we have really across the board. I'm trying to think of anything that's gone down this year, and I'm having a hard time. So maybe I'll think of something, but when you think of fuel, it's up, maintenance, it's up, landfill fees are up a little, and you know, they've stayed fairly good, but I think they're gonna come up too because they're around with labor and diesel. You know, our cans cost more, our trucks cost more. I go through this, maybe I could come up with something, but I'm not thinking of anything that stayed level or gone down. And so that's the challenge with this. So that's kind of what we've done historically on that sheet. Going down below that, I don't know, does anyone have any questions on the sheet?
The only thing I can think of that went down is investment balance, because our investment return is going down.
Yeah, and that went down too, so we kind of, yeah, things that you don't want to go down, and the others, you know, are going up. But it's where we're at. Everyone's aware of that. I mean, we all live in the world, and we pay for things. And so when we looked at these different scenarios, we went a $2 per month fee increase. These are just different scenarios. That's about a 12% increase, and that would give us $2 million and $64,000 additional annualized revenue. And so the number over here, the 6,886, that's the ending cash and investment balance number. And so, and then those are just projected out. And so we have the different scenarios. If we went $2.50 per month fee increase, that would give us $2.6 million annualized. That's about a 15% increase. And I say 15%, you go, wow, that's a lot. But then you need to remember that's over 5 years. And so it's really not too bad. I mean, I don't think any of us like fee increases, but we have to remember it. It's not an annualized. When I say that percent, it's from, you know, from $17, and so it's been that way for 5 years. And then the $3 per fee month increase would give us almost $3.1 million annualized, and then we see what that does as far as projected cash and investment balances. So just some different scenarios. As far as to fees and cash, we always, I mean, we know here it's always nice if we have plenty of time to do this, even if we get something into place, a lot of times, like Pam said, it's almost a year later before we actually see the cash come in. Because, you know, we'll start on January 1st, and then we bill for that in April, and cash would come in April and May if we said, hey, there's a fee increase. Now, if that effective date was January 1st, so that's always something I think in our minds too, is we don't ever want to leave this until we get closer. It come down to the last minute or that type of thing, just because I think it helps, in the arena we're in, if we have time and can discuss it and present it and let people know what's going on and get feedback.
I have two questions. One's really quick, and I'm probably seeing it right, but I just want to make sure. So there's not columns or it's not on the other graph, but where you got it, that's for each of the years, where it's the increase of $2, $2.50, and $3. That's just like going down, so then 23, 24, 25, that's where the 4 different numbers are.
The 4 different numbers are the ending cash and investment balance for
each of the projected years?
Yes, 23,
Okay.
26.
Yeah, sorry, that's what I was saying, it just wasn't specifically called out, and I just want to make sure I was seeing that right. And then I wanted to follow up that with so like, again, then towards like 26, it's got like a 10%. So what's like a good number or a specific amount that you'd feel comfortable with? Like, I see where if we go as current, we're going to end up in the negative pretty quick.
Mm-hmm.
What amount do you feel comfortable with having, or what percentage?
Well, and that's a good question, and one of the things I want to talk about is that the board set kind of an informal policy of what percent would trigger a fee increase. So the board's desire, and this was back in 17 when we were talking about a fee increase, was to have a year-end cash balance of 20%. 20% basically gets us almost a quarter of spending, 3 months of spending. And then when you look into the future, when we start getting to that 5%, that's when they said, we want to start talking fee increase. So that's why we thought we'd bring it before you. That helps. So as an enterprise fund, there's no limit to how much we can have cash-wise in our balances, and there's no limit as to how few dollars and cents we can have in our account. But comfort-wise, to be honest, 3 months of spending is squeaking to me. I don't know about what your thoughts are.
To me, 5%, I saw that number, and I wouldn't want to get there, especially, like we talked about earlier, recycling and how that can change. And then to me, it's just, it just takes time. I mean, if we're going to increase that. And then we're going to err on the side of caution and being conservative. Yeah, I mean, just in our roles and what we did.
Yeah.
Sure, may I ask a question?
Because, they're getting hit from all sides.
Yes.
And we're going to raise taxes. I think most of the cities are probably in that position. So, very concerned about that. I know there will be a lot of concerns as well. So whatever, I think we need to keep reserves at least 20-25%. So I certainly agree with that. But whatever is the least amount that we have to, provide.
Is there a discussion amongst this board about bits or bytes, if that makes sense?
I didn't hear your question for sure. Can you say it again?
Um,
And who is?
This is Laurie. Has there been a discussion with this group about whether you do those things in little tiny bits or bigger bytes at one time? Is there a policy for that, how you guys do that?
Bigger bites, meaning, like smaller amounts. We have done some analysis to say, well, what if we did $1 per month, per home per month every year and have it grow? It doesn't give us that time value of money as a $2 increase all at once. So if we did, talk about a $2 per home per month increase, we're talking $24 a year for, I believe if my math is correct, it is Monday morning, but an increase of 24. So we would move from $204 a year to $228 per year for the services. And then the other, I'm sorry, did that answer your question before I keep it going.
Yeah, that's kind of what I was trying to understand. So you have to do a $2 increase per year to stay on top of this. Is that correct?
That
Well,
would be our recommendation, and what history has shown us is the $2 per home per month gives us the best time value of money. And in all honesty, I don't know that I would recommend more than that. Would we like more than that? Absolutely, but certainly understanding the hard times that everyone's going through. And you're right, Board Member Turner, everything's gonna go up, including taxes.
I guess the question I had on this would be, are you recommending the $2 or you just laid all of these out? The other thing that we've talked about, not necessarily this particular board, but in this meeting here before, the lack of desire to increase fees often. Like, I don't want to go out for $2 right now and then next year go, oh, we were a little bit short, so we need to add 50 cents onto it or things like that. It's easier, like the last time we implemented the fee increase was 2018. So it's easier every 5 years to say we have to bump it up because we projected out that far. So, and that's my concern. I'd rather go an extra 50 cents, which only equates to an extra $6 a year per home, versus having to come back constantly asking. It's not even the impact. It doesn't really have a whole lot of difference, but it's the impression it gives, the perception it gives to people, like you guys are constantly out here raising rates. Anyway, so those are some of my concerns.
Good point.
Scott has raised his hand.
can I ask
Scott,
a
you have-
question?
Yeah.
Yes. Scott Bracken with Cottonwood Heights. With the change from us becoming a local district, maybe this is for council, but has our process changed? Before that, we had to go out to each municipality and get authorization in order to go through. Is that still mandated? We probably would still do the same and going out and informing and educating, but is it required that we get that, or is the sole authority within the board to do one or the other? And the reason I ask is because the last time we did that, we did actually propose a certain amount one year and then to be followed the next year with an additional amount. And there was concern with some of the municipalities on doing 2 in a row, and so we just did the one. So that's the question. Are we still required to do that process, or is that changed because of the organizational change with the state?
It's not a legal requirement that you get each council to sign off on it.
Okay.
It would be an operational decision or a board policy decision on whether you wanted to at least go out and speak to the councils. But the purpose of having representation here is that your vote is the vote of your council in a way, you know, and that's why you're here, so.
Okay, I just wanted to confirm that my understanding was correct. It's a long-term debate. I think everyone who's been involved on a council or board, you know, do we take the smaller bites? You know, say we're just going to do 50 cents a year, period. That's it, or $1 a year, whatever it happens to be, or do we just take the bigger bites? And that's a policy decision. So, we're at $17.50 a month now, right, Pam?
We're at $17 flat.
Oh, okay.
And then,
Okay. All right. Thank you.
Yeah, the next schedule would be helpful.
if you'd like, we can pull up the next page, which is the fee comparison. There we go. So this particular table doesn't just show dollars and cents. It shows the level, the service level for each municipality and what's being provided. And then over on the right side is who is providing that service, where it says provider, and then where the commodity, mainly garbage, is delivered. So this is outlined from the highest monthly fee down to the lowest. I think it's important to note that there are Murray City, West Jordan, Sandy, Draper City, South Jordan. The exclamation point that you see there shows, and Riverton shows, that they get a reduced tipping fee at the Trans-Jordan landfill. So that's just one note on those. If they are a little lower, that could be why. So right now we sit about about fourth, if I'm not mistaken, one, two, three, yeah, we're fourth from the highest as far as dollar amount. But if you look at the level of services or service level, we, in my mind, we have the highest service level. So really, the biggest bang for our buck is what we do, in my opinion. Of course, I am biased, I will state that right now. And that's gonna bleed into the, scrap program, talking about the scrap program. As you know, we provide a bulky waste cleanup, and most of the municipalities do that as well. So if that helps to look to see where we land as far as dollars and cents and service levels. And does that address your question, Board Member Bracken?
Yes, it does. Sorry, I had to find my, button. But
And then just to note, the time that we went out to ask the municipalities for, you know, $2 in 2014 increase, or excuse me, 2015, and then we were looking at 2016 going up another $2. That was after we first separated and we lost that second can revenue because of the transparency of billing, and the residents realizing they didn't need that second can and they were being charged the same amount as that first can. So that we lost about $1 million of revenue right off the bat, annually, $1 million annually. So at any rate, if we were to go up to 19 or 19.50, which I would not have heartburn if you all would approve or consider an additional 50 cents per month, that would just take us right underneath Murray City. Just so you know that the municipalities look at their rates on an annual basis, and as you know, municipalities are on a fiscal year, so any increases that are going to happen in the municipality would be published in July. So this is actually looking at 2021, and I just went back to verify that right now these are what is published on their website. But I will look again in July to see if anybody else is going up. I did talk to Chris Bell, who is the Waste and Recycling Division Director of Salt Lake City. He did say that the city is considering going up again, but they're not sure. So we'll find that out for sure. And then just a note, in Salt Lake City, they have all three cans as part of their monthly fee. The garbage, recycling, and green. Questions about this particular chart, definitely want your feedback. Is there anything else you want to see? Does this help to tell the story? There is a service on here that we provide that no one else does, and that's that landfill voucher. I do want to point that out.
What does that cost us? Is there?
Good question. It depends on use. If I remember right, 2021, and I'm going off the top of my head, so please excuse me, I believe it was about $60K, which is 6 cents per home per month that we, if you look at it as far as the monthly fee.
Yeah.
Whether we use it or not.
Yeah.
I've been trying to get this out like crazy.
Good, yeah, they're very useful. Help with a lot of code enforcement issues as well, and cleanups.
This is Cindy Sharkey from Sandy. Could we roll back to the previous slide for just a second? I have a question about that one. So let me pose this question. Paul, in his presentation, talks a lot about, as we all do, having approving our own budgets in our own cities, the questions about the financial outlook. What's happening have we seen the height of inflation? Are things going to come down? Are they going to stay where they are? So many question marks, right? So Pam, you just talked about the fact that the board agreed that the line in the sand was probably 20% for, for the reserves. So is there an argument to be made? Should it be under consideration that we could put a rate increase off until next year when we know potentially more, as to what the rate increase needs to be. Maybe we know more about the economy, the financial outlook. Have we entered a recession? Are we not going to enter a recession? I realize I did listen to your argument about you hate to get into, if we impose a rate increase next year when our projections say we're going to need it, we don't actually see the income until later in the year. Is that overly problematic? I'm posing the question. I do, in the subsequent slide where we're admitting that we are, as an entity, going from somewhere around the high middle part of the pack to the upper part of the pack in terms of the rate structure. And if our biggest argument is, well, we provide more services, that can be a hard argument to make, right? It can be. For ratepayers, that can be a hard argument to make. Yeah, we've raised your rates, but we provide more services. That may be meaningful to them, or it may not. I'm just exploring, guys, whether there's an argument to be made to wait. And Pam, between you and I, and we can meet and talk about this offline, you and Paul and I, but in our kind of outlier position in Sandy, where we are dealing with waste management for most of our residents, but Wasatch Front for a few, I get a little worried that it makes the argument hard to stay with Wasatch Front. And as I say that, you realize it's not a threat, right? It's just that, 1950 versus 15, what is our number for the 1595. I don't know if what we're going to encounter is an argument to just switch everybody over to waste management. So my story is a little bit bigger than everybody else's, and it may not matter in the end because you're only talking about 500 or 600 accounts in Sandy, right? So maybe that's not enough to make you worry about losing some accounts because the rate structure has changed so much. I don't know. I unpacked a lot there. I'm done talking and I'll listen to what you have to say.
And I just want to ask, I guess, Cindy, too, if you look on next to Sandy City, there's a little asterisk and there's an exclamation point. So it's showing that Sandy City is subsidizing those, so perhaps the customer is not paying the full rate because it looks like your city is subsidizing those customers. In addition, you guys are getting dividends and rebates, which offset tipping fees, which we do not receive. So it's kind of not in apples and oranges as far as fees because there is subsidization going on there. Do you know how you guys are subsidizing and to what extent?
Yes, I do. And as a matter of fact, Sherry, that just came up because we imposed a new fee for ratepayers for our bulk waste program. And I managed to fend off, you guys would have been really proud of me, but I managed to fend off a giant rate increase for Wasatch Front waste customers and set it at the same rate that waste management customers were going to get. The difference was supposed to be an additional $6 per month for Wasatch Front waste customers. I managed to fend that off for now, that subsidy part of it. But yes, so part of the subsidy is through property taxes, and there's an additional fee that's going to be applied. And I'm a little worried that they're going to come back to. We agreed this year the same new fee would be imposed on all customers, regardless of who their service provider was. But it was brought up that we'd reconsider that in the future.
So, Board Member Sharkey, may I ask clarification question, or maybe, so the $6 per home, or is it per month or a one-time?
Per month.
Okay, so that would apply to WFWRD customers because they're in the islands and they probably go ahead and take advantage of that bulk waste. because it's hard to identify who's who when you're out there picking it up. Is that why that would apply to, our residents up there?
Yeah, the argument from our, Public Works Department and from our Finance Department is that in the $15.95 monthly fee, that some amount of that, and they have a great deal of difficulty quantifying it, some of that goes to the bulk waste program that we run. And you'll ask different people how much of that, and you'll get varying answers.
Mm-hmm.
But in the proposal to impose some kind of new fee, there was an effort to reconcile all of this. So they established that in that $15.95, Finance said, a specific amount of it goes to the bulk waste program. Wooford customers aren't paying that. So here's our opportunity to impose a greater fee on them than anybody else. And again, I managed to get that and got the council to vote along with me that in this particular case, the fee that we're imposing and the rationale that we're using, it's unfair to apply that logic. So for now, we're not going to do it. Everybody gets charged the same fee. But I do understand the argument, and I felt like my workaround was temporary at best on deflecting that for now. So.
Got it. Thank you. I understand what you're saying. So, well, the other piece of the pie, or whatever you want to say, the puzzle, is that last month we talked about the scrap program, so the seasonal container reservation program, and it is by reservation, so the container's going into onto a resident's property, most likely in their driveway, preferably. So the board did talk about, entertaining the thought of a possible fee related to that, which kind of sounds like what Sandy City is trying to do to pay for the service. Mm-hmm. So I don't want to jump to that right away, but it seems like it's kind of bleeding into that discussion. So whenever you guys want, I think it's important to really take a look at this, ask any questions that you might have, give your feedback before we move into the scrap.
Well, I don't know, it feels like we either have to say, we need to have a rate increase, or else we need to say, or else we have to get rid of some services. Either have to cut costs, or you have to increase income, right? That's how I do in my budget. And so, I don't know, does the board, that's been something that we've talked about for a long time, that we can say we're providing all these services and we're at lower cost and still providing all these services. But if we can't continue to afford that, then we either have to decide, can we afford to give all these services, or do we need to charge for them? How do you guys feel?
I know with Murray City, obviously, we have asked the area that has Wooford if they wanted to go, with the Murray City service, and they resoundingly said no. And that was because all the services that Wooford offers for a very, it's more reasonable than what ACE, in our case, offers. And so I know Murray would not be happy. In fact, we're considering just going completely with Wooford. Well, that's been the feedback. Sweet. Well, that's serious music.
Good.
Yeah, so we appreciate it, and thank you. That's where we are. Coming to the scale.
About anybody else? Okay.
Should we roll along?
Yeah. Moving to your
Scrap? All right, let's go into the continued discussions and follow up on the scrap program. I kind of gave the background that last month there was some discussion about a desire to possibly, well, let me back up. So the board last month looked at some of the concerns that have been coming in from residents, concerns, complaints. And so these are those bullets. There are the main things of desire, wanting to return it to the old way. You as a board came to the understanding that we'd like to do that, but we just can't. So in understanding that, I think that's what brought on the dialogue as we go forward here. Just one second. So residents are paying for this service, meaning out of their monthly fee, and they can't use it because there's a limited availability. When I talk about limited availability, I want you to understand with the old way of providing the service, the annual cleanup, we delivered 124 containers every day out in the street. Now with the scrap, because of staffing, we hope to be able to deliver 80 containers a day. And again, going to the resident's driveway. So that gives you an idea of the difference of, and when we're talking about availability. And then some of the residents do not want the liability of having the container on the driveway. I wanted to make sure that I state that I understand that. However, it is an industry standard to have some sort of a liability waiver. So every hauler in the valley, no matter who it is that, you know, delivers a container, one of my neighbors got one from another private company. It was like really small, and they had to pay $200 just to have it there. We were full, so she had to go to another company to get that. At any rate, it's not she had to sign a waiver. If you go out online and look at West Jordan's dumpster program, they have a waiver there. So just wanted to make sure everybody understood. So basically looking at the second bullet, residents are paying for this service and they're not able to use it. That's where I think the dialogue started with you as a board to say, well, should we have a separate fee for this service? I wanted to make sure that I point out that and remind you that we do have a trailer rental program. It's $175 for bulk waste and $45 for green. I just rented a green trailer because we had wind damage, and it's very handy. And I mean, $45 is pretty cheap. We shared it with the neighbors because our whole neighborhood got hit. But anyway, it's on the driveway. About 4 days. I think I have on there 5, so it's about 4 days. Just a reminder that there is that option as well. That is subsidized with the monthly fee.
And is that the same size as what they'd get if they did it through the scrap, or is it a different size?
18 yards.
It's 18 yards, so it's 4 yards bigger.
Oh, okay, so they're good.
Yeah, and it's on wheels, not on the metal rollers. Because I know that some residents are concerned about damaging their driveways, and we have not had experience with that. I don't see Sione here, but David is here, but we really don't get a lot of issues with, there's minor scrapes and scratches, but they go away over time. Yes,
If we damage them, do we then fix it?
If we have caused the damage, basically that's why there's that liability. So if it's negligence, then of course. You know, if a container gets, the roll-off hits into a fence, a drain. Yeah, thank you.
Yeah.
The basketball standard, then absolutely we take care of that. That's our liability, we'll take care of it. But if it's, you know, a scrape or a scratch and a resident says you need to come redo my driveway, we're not gonna do it. Yeah.
Sounds reasonable.
Yeah, we try to protect our assets. So looking at the other municipalities out there that have a dumpster or trailer or what have you program, this is the comparisons with those services. And understand, and I put the size of the dumpster up there so you can see. West Jordan has a 30-yard bulky waste or green, $50 for the first rental, and then $200 for each additional rental thereafter during the same calendar year. The dumpster is parked in their driveway during the winter months and then on the street, as long as the residents are willing to make sure there's no mess outside of that dumpster during the warmer months. And then the South Jordan 15-yard dumpster, $40 per day, and then if they want it on the weekend, it's $80 or over a holiday. Murray City has the 18-yard green waste trailer, which is similar to what we have for $40, and then a 30-yard bulky waste for $200. In looking at the cost analysis and I was basically looking at what Paul put together for the 2021 costs, and the total amounts, let me just make sure I'm on the right page, okay. The total cost for 2021, and this is direct costs, were 1.2 million, and then we looked at the containers that we delivered, so this is a very easy cost analysis. Again, it's direct costs, $110.53 was the cost per container. If we look at, you know, overhead or anything else for that, that includes dumping fees, fuel, maintenance, labor. But if we look at the Sione's time, administration, overhead, then we're probably going up to 120, which was the new fee we asked you all to adopt coming into this year for municipalities to order and rent a roll-off container, $120 per container. So scrolling down, if you would, Renee. So we, you know, Paul put together a cost estimate for 2022, basing on, again, direct costs, and then understanding for fuel and labor, this projection is still pending for what we have for this year, $128. But we do know that tipping fees are going up, again, and, you know, fuel's going up. Where we can probably offset some of the, I won't jump ahead till 2023, sorry. So there's some options that you can look at for a fee scenario. You know, charge the full cost for each reservation, or it would become a rental, would be $130 if you want to minimize the subsidy from the monthly fee, or charge a lesser fee, and I put 40 to 50, you know, just because that seems reasonable, but what's reasonable to me may not be reasonable to someone else. So it's just a scenario, and then the remaining costs would be subsidized by the monthly fee. Now, what would be the revenue from that would just depend on how many rentals we get, and that's the piece we don't know. The thing I like about charging a fee is I think it would make it more manageable, and what I mean by that is I think residents that truly need it would call and rent it. Whereas now we get partial loads, and some of the stuff that gets thrown in there could really just be hauled to the landfill either in a car. Some of the stuff could go to donations. But at any rate, so looking at 2023, we want to make sure we can secure the ability to, one, continue this service, and then have it to where we can meet that level of about 80 containers per day. To give you an idea of what percent of homes that means for each area, it's roughly 11 to 13% of the homes that are within our district boundaries within your municipality. We're basically able to serve anywhere from 11 to 13% of those homes. That makes sense, I hope, with that number. So that's our target. In order to do that, we would ask, when we get into the budget season, we plan on coming before you and asking for 3 FTEs to help secure that service. It's an estimated cost of $210K increased cost, but we also think that we can offset some of that by reducing overtime. So we're paying a lot of overtime because drivers are coming in on their day off. We also have our manager who's working a lot of overtime to try to schedule. We also have a part-time person that's helping with scheduling. Those two will remain. But we also understand that we don't need to lease as many trucks from Salt Lake County on those hook lift trucks because we don't have the bodies to use them. So we're anticipating reducing that number and working with Salt Lake County to understand what that magic number is. Right now, we lease 16 trucks. We could be looking at reducing that by 6 and only leasing 10. We have to notice them because obviously their budget is dependent on us and what we're going to be able to pay, what we pay them. So we think we could offset most of that cost going forward. We want to keep on the rotation schedule because the thought was, would we open this up district-wide, you know, during the 6, now we're proposing 7 months of the reservations being open? Would we would want to keep it on a rotation schedule going clockwise through each municipality and having a schedule simply to keep the economies and efficiencies of scale and make it more manageable. The other thing is we, as I mentioned, we want to talk about adding 2 weeks on the front of the program, which means we would start in early April, end of March, and early April versus the mid-April, and go through mid-October. So we're adding a full month worth because there's that desire to increase the number or increase the days for the municipalities. So there's that thought as well. And then we just, because those FTEs would mainly be working those 7 months, you know, basically full-time hours going full bore, during the off-season, quote-unquote, they would help with leaf bag, Christmas tree, and then we can also open up the reservation and trailer rental, more of those being offered each day with those additional FTEs. So another way, again, to increase the availability to get rid of bulky waste for our residents. So, questions so far, I went through that pretty quick, but I want to make sure I give you information and also options. If you want to look at a fee for this service versus a monthly fee or a smaller monthly fee plus a fee here. I know it's going to be hard for our residents no matter what we do with the fees. I think it depends on what pill you want to bite or what pill you want to swallow and how much you want to bite off, what you're willing to defend.
Hey Pam, it's Patrick Schaefer from Kearns. I know about 2 weeks ago I talked to you after the end of our council meeting about how they were scheduling the trucks, picking up empties and dropping off empties and picking up full trucks. Did you happen to find out anything on that information we talked about?
No, I don't know the specifics on that particular case where the truck didn't take that full one.
Because I'm just saying that if that was just one incident in Kearns. If that's happening multiple times a day, we're wasting a lot of fuel just in that aspect alone.
I can't say that it doesn't happen often. I don't think that it is something that we can watch. But for efficiencies and schedule, I know Sione is on top of it quite well. And Ray is the supervisor over that service as well. The GPSs that we put on the trucks and then now we have them on the containers has helped efficiencies quite a bit.
Okay, well, I'm just saying that's some way we can also help with costs, you know.
Yeah, it's hard to say. That could have been a one-off.
Thank you. Does anyone else have any other questions or comments, suggestions?
This is Robert Pignon with Immigration Canyon. I do want to make a quick observation. I appreciate every piece that you've presented here, Pam, and I think you've put together a package that works. If we can go to the slide that shows all the different municipalities, if you will, the one observation I'm just making in the back of my mind is with our increase potential, I am pretty certain that all of these districts are going to have similar increases to accommodate inflation and fuel. I would not be afraid to do the right thing for our district to keep it viable. I think if we target that 20% and if we deem that it's a $2 or $2.50 a month increase, I think if that's the right thing to do, we shouldn't base it off of fear of what the other districts are doing because they too are in the same position of needing to reevaluate. So just that quick observation.
No, I would echo that too, and the thing about it is if they're not doing it, they're subsidizing it some way, because we're not building a great big enterprise fund here, we're covering costs, you know, and making sure that we have enough money in there that if something happens with the economy, we can continue to provide a really essential service. So that's why I brought up that question earlier about subsidies, because I know I get complaints all the time because Riverton and Harriman all intertwine, and people will say, well, how come in Riverton we only have to pay $5? It's like, because somewhere else you're paying it, it's just that bill only says $5, but I guarantee you, somewhere you're paying into that fund that's subsidizing those costs because there just simply are hard costs associated with this.
Mm-hmm.
One last comment. If we do decide to increase even up to $3 extra a month, I would be comfortable defending it within my metro township.
Thank you. Does anyone else have any comments, questions, concerns?
This is Cindy again, just for an FYI. We already made our rate adjustment by reducing recycling to twice a month. So that was a $2.45 a month consideration. We were going to increase our rates by that much to keep every week recycling. So to avoid that, we reduced. That saved our ratepayers $2.45. It was an incredibly painful transition that still exists to this day. It wasn't a unanimous decision by the council. But so I guess what I would say is don't expect that from Sandy because we already made a service level adjustment in order to avoid that.
Yeah, thanks for sharing that, Cindy, because you're talking exactly what we just said. Either we have to cut services or we have to increase to cover the cost. So, and then Sandy, it sounds like you guys decided to cut some services.
Yeah, it's true.
So I'll just say, to stay close to that 20%, to me, I feel like that 250 is like in the middle personally in representing, you know, our little community of White City, I think that 250 seems within reason without jumping all the way to 3, but at the same time, $2 not quite being enough to even cover, like it'll cover like the 2 years at that 20%, but then, and that's, he's guessing too. These aren't hard numbers.
Yeah.
Obviously, any factors could change, which could change all this, which were, yes, they might need to ask for more later, but I feel like that 250 seems, for at least for me, within reason to jump up to.
Yeah, I was leaning to that myself. And I mean, if we get 2 years down and our balance is now 80 and 85% because we just guessed way too much, then we can reduce their fees. But I don't anticipate that happening.
I haven't seen it yet. But I can say the last fee of $2.25 did sustain us for 5 years, even with the inflation that we experienced. But the thing that offset that increased cost with recycling in 2019 was the fact that we were short on staff. So that was a double-edged sword. We saved $1 million in personnel costs, but we really took a hit with morale and everything else.
Yeah, and I'll tell you another, and this will be kudos to you, Paul, and this has only been my time on the board, but we were looking at a fee increase well before now, but you took a different look at things and started adjusting numbers and saying, no, let's really look at hard costs and let's really understand it. So it was really able, through good management, to push it out so that it did last for 5 years.
Yeah.
Yeah, we realize, I mean, we really do realize this is a burden, and there's people out there that it's a challenge, and it's a needed service. This isn't optional like a lot of the increased costs are. So we realize that, because we talked about it in years prior, and we go, well, we think with recycling and where we're at, let's hold off. But it's hard because we want to be conservative on one hand, you know, and make sure we have cash to operate, but then we're well aware of those costs. And then I was just going to add, too, as far as adding FTEs to scrap, Pam mentioned that, but that's something we've talked about internally, and we think it would help out quite a bit with the service level and get some stability there. And then I talked with Pam, she mentioned this, but 210, I think, is the full cost, but I think a lot of that we're already incurring when we're pulling people from side load.
Yeah.
And then also, we're significantly under budget on our temp labor. And so I think if we could get some more stability there and then still use temp labor too in the future. And I think, I mean, I'm getting old and I've been through some of these cycles. And it's interesting because I've worked at places where we couldn't get employees, and then there's people lined up at the door asking for work. And so you don't know, and we've had a really good economic run in Utah. But just because it's been this way for the last few years, you know, that's why I say we just kind of have to wait and see what's going to play out in the future. But I do think FTEs, especially, we have to be aware of keeping them busy year-round and providing meaningful work. But I do think that would help the program with some stability and get people that are trained and that are gonna be here 5 days a week and that type of thing. Because from my perspective, it's just been hard with temp labor in the current job market.
And Sherry, I think your comments are well stated, because since I've been on this board for a couple of years now, I've been expecting, in fact, before I came on, I was expecting we were gonna have an increase. So I've been surprised that we've been able to wait till now.
Yeah, thank you. I agree. I think it's good management and
Yep.
trying hard to make sure we're not growing in fund, but just providing the service. Okay, does anyone else have any questions?
Robert Pignon with Immigration.
Yeah.
So cutting services, I think, would be a major problem in my metro township. I think we would not hear the end of it if we went to a biweekly recycle pickup. So I think we need to be real careful on what people are currently comfortable and what that perceived return value would be, because to have that blue container 2 weeks because we saved $1.25 a week or a pickup would not go well for my people, if you will. So I think we need to be very cautious on making change with very minimal savings potentially being looked at.
Thank you. Well noted.
Thank you.
This is Scott with Cottonwood Heights. I would echo the biweekly. I remember the times when we were doing that. The hardest part was always figuring, is it this week or not? And it was just so much more convenient. And with the increase in online shopping and everything, having the weekly recycling, I think is really important out here this way as well.
Thank you. Okay, we're gonna move on to 4.6, just to confirm or cancel the July 18th, 2022 board meeting, the third Monday in July.
So, as a board, it's been kind of historical that you all have canceled that meeting because of the holidays, and looking at our schedule and what we have coming up, I think we're okay as staff if you would like to cancel that meeting. However, if you would like to continue discussions about fees or anything else, we would certainly make sure that all the materials you need are here. Otherwise, what we've done in the past and what I can do is send out the 2022 second quarter financial report to you via email so you can review it, because we are required to do that by law. And then any general manager's report that I might have, I can send that out electronically. So we're okay if you'd like to cancel, we're okay if you'd like to meet.
So we did talk about this too in pre-board meeting, and just to make sure that there's nothing critical. And that if we cancel July, it's not gonna impact the fee increase, whether we do it or not. And Pam and her team felt confident that it would be, it won't impact that, because we still have plenty of time to have more discussions and stuff about that. But how does the board feel about canceling the July meeting?
Fine with me, I mean.
One less meeting.
Yeah.
Two less for us.
Fine with
This
it.
is Tessa with Copperton Metro Township. I would like to make a motion to cancel the July 18th meeting.
Dan Gibbons in Holiday, I second.
Okay, I have a motion and a second. All in favor of canceling the July 18th board meeting, please say aye.
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 Are there any opposed? Okay, so we will cancel the July 18th meeting. Do we have any need for a closed session?
No, we do not.
Okay. And then, does anybody on the board have any other issues they'd like to discuss now? Any other board?
No. What's the date of the August meeting?
22nd.
In the August?
It's just what it has right next to, on that item of from the agenda.
Yes.
So August 22nd.
Yes, Madam Chair, I think we have a point of order related to the annual comprehensive financial report.
Did we need to?
I think we, yeah.
Okay, I
Sorry about
apologize. We're gonna go back in order to 4.3. We actually needed a formal motion on that to accept the 2021 annual comprehensive financial report. Could I get a motion on that?
This is Scott from Cottonwood Heights. I would, move that we approve and accept that report.
Okay, we have a motion. Can I have a second?
Laurie
Patrick
Stringer,
Schaefer from Kearns, I'll second.
there you go.
Okay, we have a second. All those in favor?
Aye.
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 Are there any opposed? Okay. All right, and then, item number 7, the future board meeting that will actually be on August 22nd will be the 2022 second quarter financial report. But you'll send that out prior to
We
that.
will, and Paul will just do a review and see if there's any questions. He'll just do a briefing
Okay.
during that meeting.
And then we'll continue our discussion on the fees. So I just encourage everyone to really look through the information she sent, come with any questions that pop up between now and then, so we can have a really good discussion on that. We probably need to start making some decisions. And then seasonal container program, the scrap program, as part of that discussion, and then general manager report. Okay, and unless somebody has some comments or questions, I'll look for a motion to adjourn.
So moved,
And move to adjourn, any second?
Second.
Keith second. Okay, all those in favor?
Aye.
Aye.
Thank you all very much.
Okay.
Take care, everybody.
Have a fun July.